Hello and welcome to Magic Indicator Strategies. Today we will show you one of the most accurate Lux Algo indicator strategies available on TradingView. We personally have been using this method for a while and it has generated significant income for us. We decided to give back to the community and share this secret strategy with you for free, so that you can make good and consistent profits from trading. Before we start, be sure to click the like button and subscribe to the channel if you want to become a pro trader as fast as possible. Okay, we're currently viewing the Bitcoin chart on the 3-minute time frame. For this strategy we're using two TradingView indicators. We will show you how to add them to the chart and what settings to use at the end of this video. Now let's break down the logic behind this original concept. If you've been studying different trading styles for a while, you probably know by now that a trend following strategy is an absolute leader when it comes to long-term success in trading. However, if you're a beginner and you're unfamiliar with this approach, here's a quick explanation. Trend trading is a trading style that attempts to capture gains through the analysis of an asset's momentum in a particular direction. When the price is moving in one overall direction, such as up or down, that is called a trend. Trend traders enter a long position when a security is trending upward. An uptrend is characterized by higher swing lows and higher swing highs. Likewise, trend traders may opt to enter a short position when an asset is trending lower. A downtrend is characterized by lower swing lows and lower swing highs. Trend trading strategies assume that a security will continue to move in the same direction as it is currently trending. Such strategies often contain a take profit or stop loss provision in order to lock in a profit or avoid big losses if a trend reversal occurs. Trend trading is used by short, intermediate, and long-term traders. In order to make sure that you're reading the chart correctly, it's highly advisable to use trend following indicators. In our opinion, a long-term exponential moving average is the best choice. The general rule is that a long position can only be taken when the price is above the EMA. On the other hand, short trades can only be taken when the price is below the moving average. By following this rule, we make sure that we're only taking high probability trades. We also use a buy and sell indicator, which is the core of our strategy. This tool reads the charts in contrarian mode. The contrarian trading strategy is one that goes against the prevailing sentiment in the market. In other words, it is a trading method that seeks to trade in the opposite direction of a recent move in a market. This means that you sell when others are buying, and you buy when others are selling. If you've been paying close attention, you might have noticed that these two indicators contradict each other. But what if I told you that we found a way to combine them and it actually works? So let's now proceed to the exact entry rules and you will see for yourself how this strategy beats the market. For a buy signal to be valid, the following conditions must be in place. First, a buy or strong buy label must be printed on the chart. Second, the closing price of the candlestick must be greater than the EMA. Third, the candlestick on which a signal was issued must touch or get very close to the reversal green zone. Lastly, the lower wick of the bar must be longer than the body of the candle. Here's an example of the candlestick we're looking for. When these rules are met, a buy order should be placed at the close of the trigger candlestick. The stop loss will be set below the recent lowest point. Target at least 2 times the risk with this strategy. Let's take a look at one more buy example. Here we see that the uptrend has been confirmed by the position of the price against the EMA. The market retreated after a sharp move to the upside, however the price stayed above the EMA, showing that the trend could continue. The candlestick got very close to the reversal zone. It also has a long lower wick. The signal to buy is also present, which meets all the criteria for a long trade. For a short signal, the price must be positioned below the EMA as a first condition. Secondly, a retracement must occur where the candlestick touches or gets very close to the red reversal zone. The bar must have a long upper wick. Ideally, the wick must be longer than the candlestick's body. Lastly, a sell or a strong sell signal must be issued above the candlestick that meets the requirements. The stop loss will be set above the most recent swing. Just like with long trades, target at least 2 times the amount you risk per position. We've tested this strategy on Bitcoin 3-minute time frame and it has shown great results. You can expect a win ratio of over 80%, which is truly amazing. By the way, do not risk more than 5% of your trading account per trade. Also use no more than 20-to-1 leverage. This strategy is suitable on all markets that have a high level of liquidity. You can use it on lower time frames such as 1, 3, 5 and 15-minute timeframes. Okay, now let us show you how to build this setup. First, log into TradingView and open the charts. Access the indicators menu and search for EMA. Select the exponential moving average indicator. Change its length to 200. Set the color as white. For the next indicator, search for Lux Algo Premium. Add this indicator right here. This is a premium indicator for which you will need to purchase a subscription on the official Lux Algo website. Once you've installed this tool onto the chart, change its settings as we're doing right now. As a bonus, let us show you how to create alerts for this strategy. First, click on Alerts button and enable the Lux Algo indicator. Then select Alerts for any contrarian signals. Set the alert once per bar close. You will get notified every time the indicator prints buy, sell or strong sell signals. Before placing an order, check if the rest of the conditions are met. Thanks for watching and see you in the next video.